Hello and welcome back to the day 3 of Practice to Pass webinar for the June 2021 session. So let's explore what we have got to do and what is the agenda of the day 3 of Audit and Assurance webinar. Okay guys, as you all are familiar that we have got two sections in the exam, 3 MTQs in the section A, and then we have got 3 long questions in the section B. As far as course content is concerned, we have got 3 major areas. On the day 1 of this webinar, we covered audit risk along with a minor topic ethics. On the day 2 of this webinar, we covered internal control systems, another major area, along with a minor area called corporate governance. And on the day 3, that is today, we are about to start the backbone of this syllabus, the most famous thing, the talk of the town, the hot cake, and it's called substantive procedures. So it's time to start substantive procedures, and let's straight away go to substantive procedures. But before we move on to the substantive procedures, I would like to religiously recall everything, why students fail in this particular exam, why the failure rate is so high. The failure rate is so high because we as students are not having good enough typing speed and we are not putting ourselves into the exam pressure. So the typing speed and the inability to complete the paper in the due time, this is the first reason of such high failure rate. Second reason of such high failure rate is we are not giving due respect to the MTQs. Nobody is solving the MTQs from the Kaplan kit. Nobody is solving the MTQs from the BPP kit. Even if there is a small group of students, those who are solving MTQs, they are only focusing on one particular kit, either on Kaplan or BPP. Even if there is a particular group of students who are focusing on the MTQs, they are not giving due respect to the solution of the MTQs. So what should you do? What should be your plan of action? You need to invest quality time on the MTQs and you need to invest quality time on the solution of the MTQs. And the plan should be 6 MTQs per day, 3 MTQs from the Kaplan kit, 3 MTQs from the BPP kit, and you need to read the solution as well. You should be comfortable with each and every option, even if it is true or even if it is false. Third reason of such high failure rate is that students generally speaking, they tend to ignore the knowledge base and they tend to ignore the minor topics. So you need to invest time in the knowledge base, daily 1 hour on knowledge base, half an hour typing, and then half an hour you need to read it couple of times so that you can retain something out of it. Do not ignore the minor areas. Last but not the least, the major reason of such high failure rate is exam technique. And I tried to emphasize the exam technique of audit risk on the day 1. I tried to figure out and I tried to reveal few secrets regarding the exam technique of internal controls on the day 2. And today I will try my level best to come up with a solution, with an idea in your mind, so that I can inject a technique in your mind regarding the substantive procedures. Okay guys, let's start substantive procedures. Even if somebody is present today and that individual was absent yesterday or was absent on the day 1, no problem whatsoever. Substantive procedure is a brand new story which we need to start from the scratch. So you have to be motivated, you have to be aggressive, you have to concentrate, and most importantly, you don't have to panic. Very important thing about substantive procedure: after few hours of hard work, let's say 3 hours of today, another 3 hours of tomorrow, there will be a point of time, not after half an hour, after 6 to 8 hours of hard work, there will be a point of time that if I am going to come up with a brand new question in front of you, having total 20 marks regarding the substantive procedures, you will be able to score 15-16 marks with ease. That would be a walk in the park for you. So you have to have patience regarding this topic. This topic requires patience. You don't have to jump towards the conclusion in half an hour's time. So take it easy, There is no point of tension, there is no point of panic. So take it easy. Let's explore this topic as slowly as we could. Okay, the topic is called substantive procedure, and that's the major area number 3 after risk and controls. Now the important question is, what is or what are substantive procedures? As an auditor, we all come up with actions to gather sufficient appropriate evidence. As auditors, we plan and implement certain actions. Now those actions could be divided into two categories: the actions taken by the auditor in order to gather some kind of evidence. Those actions can be divided into two major categories. The first category is called test of controls. The name speaks for itself. Test of controls means you are trying to test the control system of the organization, the control system designed and implemented by the management. So when it comes to test of controls, we are trying to evaluate the operating effectiveness of the internal control systems designed by the management. Now that's the type number 1. Let's ignore that for a moment. The second type of auditors actions are called substantive procedures. The substantive procedures are focused on one thing only, and that one thing is called financial statements. So substantive procedures are certain actions taken by the auditor all over the world in order to verify something regarding financial statements. Maybe you would like to verify whether the financial statements are accurate, whether the things are complete, whether the things which have been recorded by the client, they do exist. So there are certain things which we as auditor would like to verify, and in order to verify those things, we come up with certain procedures, and those procedures are called substantive procedures. Okay, as far as the marking scheme is concerned, there is 1 mark per substantive procedure. If the examiner is going to ask for a 5-mark question, you need to come up with 5 procedures. If you are going to write 7 procedures, you are not going to get more than 5 marks. If you are going to write 10 procedures, you are not going to get any extra bonus or something. You will only get 5 marks. So if a question comes up in the exam asking you for, describe 5 substantive procedures in order to verify the receivables of the client, and you know 10 procedures, and you end up writing all those 10 procedures, there is no point of doing that. You should think, plan, and sensibly, and with a plan, with a conscious mind, you should write only 5 procedures according to the marking scheme. If you are done with the full exam and still left with the time, and you have got nothing to do, and in order to kill time, you can add extra procedures, the 6th and the 7th. But once you are going with the flow, and once you are once you are solving the exam, you should follow the marking scheme. If the examiner has asked you for 5 procedures, do not write the 6th procedure. There is no point of doing that, because there is a huge risk attached with that. If you are going to write 7 procedures, there is a huge possibility that at the end of the day, you might not be able to complete the exam. And just imagine a situation: a student has attempted 90-mark paper and he or she end up failing the exam at 48. Is this a good story or a bad story? There is no point of writing extra procedures if one has to compromise on the total marks or total marks attempted. So stick to the marking scheme. So we all are clear with respect to the marking scheme: 1 mark per substantive procedure. Now what would be the exam requirement? The exam requirement will be the same, and that is describe substantive procedure the auditor should perform in order to verify. Now in order to verify the depreciation expense, the revenue, the receivable, maybe in order to verify a certain claim made, a claim made by the customer in against the a kind of a warranty claim, or describe the substantive procedure the auditor should perform in order to verify the revaluation surplus created by the client during the year. So it could be anything. It could be anything out of the financial statement, any chunk of it. Yes, it is the most important area of audit and assurance. Now, we all are familiar that we are studying substantive procedures. Now, the burning question is, what are substantive procedures? The substantive procedures can be divided into a mnemonic called AEIOU. The A stands for analytical procedures. Analytical procedures means comparison. Comparison of financial data with non-financial data, comparison of financial data with financial data. So maybe I would like to compare the revenue of my client for this year with the last year, specifically on a month by month basis. And if there is any significant fluctuation, particularly in the last quarter or so, I would like to have a discussion with the client and I would like to further investigate that. So analytical procedures are comparisons. These comparisons are extremely important because these comparisons, also known as analytical procedure, will highlight unusual fluctuations. Analytical procedures will highlight unusual relationships between the data. For example, the sales have gone up, but the administration costs have gone down. This is an analytical procedure. You are comparing two things, and this analytical procedure is not revealing a actual material misstatement, but this analytical procedure, the sales have gone up, but the cost of sales or the administration costs have gone down. This has revealed something, and that is there is a huge possibility that revenue might be overstated. There is a huge possibility that certain items from the cost of sales or from the distribution cost have been omitted. So the analytical procedure does not categorically identify a material misstatement, but it does lead you to a situation where you can figure out that there is something wrong going on. So analytical procedures are going to highlight potential problematic areas. Analytical procedures are going to highlight potential problematic areas, potential areas of material misstatement, so that you can remain alert, and so that you might be able to identify any material misstatement out of it. Okay, let's continue. Substantive procedure. Let's continue with the second one. E stands for inquiries and confirmation. So these are two different things. Let's break them down. Inquire. As an auditor, it is my fundamental right to inquire from the relevant personnel out of the client. So I can inquire stuff from the finance director. I can inquire stuff from the financial controller. I can inquire stuff from the management. I can inquire stuff from the HR. I can inquire stuff from, let's say, the production manager. So inquiries. What do inquiries means? It's the fundamental right of the auditor. And inquiry means that you are going to investigate and you are going to have a discussion with the management. So very often you are going to figure out in the past papers, the examiner would come up with wording such as discuss the assumptions used in the calculation of, let's say, depreciation with the management. Have a discussion with the management regarding the assumptions used in the calculation of depreciation. So what does that word discussion means? It means you are having a chit chat with the management, and you are trying to figure out some evidence, and this is classified under the category of inquiries. Then comes confirmation. What does confirmation means? The confirmations are a sort of an audit evidence. Confirmations are audit evidence gathered definitely by the auditor, but confirmations are obtained through third parties. Confirmations are obtained through third parties such as my client's lawyer, my client's receivables, my client's payables, the insurance provider, the tax authorities, and so on. So confirmations are a source of evidence. It's a procedure performed by the auditor, but the evidence is derived from the third parties. Maybe you would like to verify the existence of receivable through the receivable itself. Maybe you would like to contact them. Maybe you would like to write them a letter, and maybe you would like to get some kind of a confirmation. Maybe you would like to verify the valuation of a legal claim by contacting the legal advisor of the client, and you might want to have a confirmation in writing from the legal advisor that a certain liability does exist. So this is confirmations. Okay, AE, then move on to I. The word I is extremely important and very, very frequently used. Inspection can be classified under two categories. We tend to inspect either the tangible assets or the documents. So I would like to select a sample of non-current asset from the non-current asset register. Now I've selected the sample from the non-current asset register, but I would like to make sure that all those things which are incorporated in the non-current asset register, they do exist in the premises, in the factory or in the warehouse, whatever. So I need to inspect those assets now. So inspection of the assets, and other way around, you might want to select a sample of assets which are present in premises, and you might end up inspecting the tangible, inspecting the non-current asset register. So inspection can be divided into two categories. Either you are going to inspect the asset, or you are going to inspect the documents such as good dispatch notes, good receive note, invoices, even accounting books, non-current asset register, sales day book. Okay, AEIOU, observation. You all are already familiar. Observation means that you are not going to perform any activity, rather you are going to observe what the client is doing. Are they following the SOPs? Are they making sure that the relevant compliance is ensured? So observation. Last but not the least, recalculation. What does recalculation means? Recalculation means that you are going to obtain the calculations performed by the client, and you might want to cast them, you might want to add them up just to make sure that there is no arithmetical mistake. So recalculation means that you are going to obtain the client's data, the calculations which have already been performed by the client, and you are going to recalculate them just to make sure that there is no arithmetical mistake. If you are going to use your own assumptions, if you are not going to just gather the 100% data of the client, that is called reperformance. Recalculation and reperformance have got a slight difference in it. When it comes to recalculation, I expect 100% copy paste results with the client, but when it comes to reperformance, a minor or a slight deviation could be expected, but there should not be any major difference. So these are the substantive procedures which we need to apply. AEIOU. Okay, so this is, I think, clear that we all are trying to apply AEIOU. But the question is, why do we need to apply AEIOU? We need to apply AEIOU because we want to be sure that the financial statements are expressing a true and fair view. Now, we want to verify whether the financial statements are representing a true and fair view. There is a very important terminology called assertions. What does assertion means? Assertions are the claims of the management. These are the confident statements of facts and figures which are claimed by the management. So just imagine you are the management of a listed company and I am the auditor of that particular company. I need to verify whether the financial statements are expressing true and fair view. And you as a management would be claiming that the statement of financial position, or for that matter the statement of profit or loss account, is expressing a true and fair view. So you are claiming that the financial statements are expressing a true and fair view, and I need to verify whether the financial statements are literally expressing a true and fair view. So here comes a word, a terminology called assertions. Assertions are those claims made by the management. Now those assertions and those claims can be divided into two major categories. The first category of the claims, the first category of assertions is about the statement of financial position. And the second category of assertions is about the statement of profit or loss account. So statement of financial position and statement of profit or loss account. When it comes to statement of financial position, there are four major assertions. What are assertions? The claims of the management. So there are four major things which are claimed by the management regarding the integrity of the statement of financial position. Now, what are those four things? Number one, existence. Number second, valuation. Number third, completeness. Number fourth, rights and obligation. Existence, valuation, completeness, rights and obligation, EVCR. So just imagine you guys are the management of a listed company and I'm the auditor. You all will say, as a management, as the accounts department, as the board of directors, specifically as a finance director, you all will say, sir, all those tangible or intangible assets, all those liabilities which we have recognized in the statement of financial position are not fake. They literally exist. So we have not recorded anything fake. As a management, you will claim that all the elements of the statement of financial position, they do exist. What does existence means? Existence means that all the, let's talk about assets. All the assets which have been recognized by you guys, that is the management, all those assets which have been recognized by the management, they do exist. So there is nothing fake. So we have not recognized 5 plants, although as a matter of fact there are only 4 plants. We have not recognized 5 million receivables, although one out of those 5 million, 1 million has been written off, or 1 million has gone into bankruptcy. So we have only recognized those assets which exist for real. That's the assertion or claim made by the management. What I am supposed to do as an auditor, I need to verify that this element of existence is literally there. Let's talk about the second assertion, which is called valuation. All those assets and liabilities which have been recorded by the management have been recorded at appropriate value. So they have not overstated the assets. So they have not understated the liabilities. As a management, you will claim that the assets or the liabilities are neither overstated nor understated. So as a management, you will claim that the financial statements are valued at correct value. So this is another assertion made by the management, and as an auditor, I need to verify this. Let's talk about the third assertion, completeness. The third assertion which is made by the management regarding the statement of financial position is called completeness. And completeness means that as a management, you guys are claiming that you have not skipped anything. Each and every element of assets, and specifically each and every element of liability which should have been recorded, you have recorded them. Completeness is an assertion which is more famous for the liabilities, because as a management, you would like to have a situation in which there are 5 liabilities, but you are recording only 3. You don't wish to record the 4th and the 5th liability, because that will compromise your financial statements. So completeness is an issue which is not heavily associated with assets, because as a management, you would like to incorporate each and every asset. You won't miss anything. So completeness is not an issue when it comes to assets, but completeness is an issue when it comes to liabilities. So what does completeness means? Each and everything which should be recorded have been recorded by the management. That's what you guys are claiming, and that's what I need to verify. Okay, the fourth assertion is called rights and obligations. Rights and obligations. The word rights has got to do with the assets, and the word obligation has got to do with the liabilities. The word rights has got to do with assets, and the word obligation has got to do with the liabilities. Normally speaking, I do not use the word rights, I do not use the word obligations, rather I use the word ownership. So any asset which have been recognized by me as a management should be the ownership of my company. I cannot incorporate an asset in the statement of financial position considering I do not own that asset. Or maybe I do own that asset, but that asset is not under the control of my company, it is under the control of some other company. I've rented it out, so I do not own it, I do not have the rights of it. So when it comes to assets, you need to check or you need to evaluate the rights, and when it comes to liabilities, you need to evaluate the obligations of it, that is the liabilities. So these are the assertions associated with the statement of financial position, EVCR. Whenever an exam question comes up, and that exam question is going to ask you describe or explain the substantive procedures you are going to perform in order to verify blah blah blah. First thing which you need to figure out is that whether that particular item which you need to verify belongs to statement of financial position or it belongs to another family called statement of profit and loss. So you need to verify this. This is extremely important. Okay, let's go to the category number 2 of the assertions, which is statement of profit or loss account items such as revenue, such as administration cost, finance cost, distribution cost. Okay, statement of profit or loss. The assertions are COCCA, COCA. The first C stands for completeness. So all those expenses which are the obligation of the company should be recorded by the client. So they should not miss anything out. Again, completeness is an issue which is not associated with revenue. As a client, you would like to record each and everything. Maybe you would like to record even those things which you should not record. So completeness is not an issue when it comes to revenue. It is more of an issue when it comes to expenses. Second one is called occurrence. Occurrence is exactly what the word existence is. Existence word has got to do with statement of financial position. Occurrence word has got to do with the statement of profit and loss account. What does occurrence means? Occurrence means that any transaction which has been recorded by the client should have occurred for real. So you cannot recognize any fake transaction. So if you are recognizing revenue against Mr. Ahmed 10,000 pounds, that transaction should have occurred. That good dispatch note should have been there. That order should have been there. That invoice should have been raised. So it should occur. It should not be fake. The third item is called C for cutoff. What does cutoff means? Cutoff means that you need to recognize the revenue and the expenses in the correct accounting period. So you cannot recognize revenue early. You cannot defer the expenses, and you cannot create a situation in which you are not recognizing the expense intentionally in this period. You are deferring it for the next period. Don't do that. This is an assertion made by the management. The management claims that we have ensured the assertion of cutoff. So we have recognized the revenues and the expenses in the correct accounting period. Just imagine you received the goods on 27 December. So if you receive the goods on 27 December, you need to recognize the expense and the payable in this particular month. But even if you receive the invoice on 3rd January, you need to recognize it in the liability and the expense in this particular period. So similarly, if you dispatch the goods on 2nd January, although you received the order on 27 December, you cannot recognize the revenue, because until or unless you have not dispatched the goods, until or unless you have not completed the performance obligation from your side, you cannot recognize the revenue. So this cutoff is extremely important. Second last is classification. You need to make sure that you are appropriately classifying the revenues and the different kinds of expenses. We did discuss in the section of audit risk that there is a possibility that the misclassification of cost between the cost of sales and the operating expenses, that's classification for you. You need to make sure that things have not been incorrectly classified. Last but not the least, just like the valuation, there is an assertion called accuracy. Those transactions which you have recorded, you need to make sure that you have recorded at a correct value. Correct value means you need to make sure that you have accurately valued it. So these are the assertions regarding the statement of profit or loss. Okay, let me quickly recall what I have taught today. We are studying statement of financial, we are studying substantive procedures. And when it comes to substantive procedures, we need to apply procedures, and the procedures are AEIOU. A means analytical procedures, which are comparisons, such as comparison of this year's receivable with the last year receivable, comparison of your company's increase in revenue with the industry average, all kinds of comparisons. Comparisons in increase in the comparison of new customer with the customer complaints, all kinds of financial and non-financial comparisons. E for inquiries, we need to inquire from the management and seek confirmations. We need to seek confirmation from third parties. I for inspection, we need to inspect either the tangible assets, or we need to inspect certain documents or books of accounts. we can observe, we can recalculate. So we need to apply AEIOU. But why do we need to apply AEIOU? Because we need to verify assertions. What kind of assertions? Such as EVCR and COCCA. EVCR assertion has got to do with the statement of financial position, whereas COCCA assertion has got to do with the statement of profit or loss account. Okay, last thing. We want to apply AEIOU. We want to verify EVCR. We want to verify COCA. But the burning question is how we are going to verify, from where I'm going to get the evidence. So the most important thing is the source of evidence. We are going to get evidence from these 5 elements, and the 5 elements are DA3. What is DA3? D stands for directors. So I might want to inquire from directors. Maybe on a very critical situation, I would like to get written confirmation from the directors, and those written confirmations which we seek from the directors is called written representation. So the directors are a valuable source of evidence. Maybe I would like to have a discussion with the directors regarding the assumptions used in the revaluation of the non-current assets. So how are we going to get the evidence? We would like to get evidence through assets. I would like to physically inspect the assets. I would like to visit the company warehouse and make sure that the actual stock is equal to the inventory records. So I might want to to be in a situation called stock count. So the physical inspection of assets is another source of evidence. In order to verify the carrying value of the in order to verify the condition of the non-current asset, you might want to physically inspect the asset and compare what's the net book value, what's the value in use, like what's the fair value less cost to sell, what's the physical condition of asset. So asset is another source of evidence. Then another source of evidence is called documents. There are so many types of documents which are a great source of evidence, such as sales invoice, purchase invoice, good dispatch note, good receipt note, even documents such as correspondence between the correspondence between my client and their debtors, correspondence between my client and their supplier, correspondence between my client and their lawyer. So these are all different kinds of documents. If my client has obtained a loan during the year, there is a document called loan agreement. So there are many types of documents which can help you in gathering evidence. The second last thing in the DA3 is called A for accounting books and records, such as sales day book, purchase day book, most importantly cash day book, non-current asset register, the sales return day book, all those kinds of books and records. These are all sources of evidence. Last, DA3, the last element is called third parties. What third parties? Bank, lawyer, debtors, payables, insurance providers, tax authorities, and the list goes on. You might want to get direct confirmation from the bank through a letter called bank confirmation letter. You might want to have a direct confirmation from the lawyer regarding let's say claim made by certain customers. You might want to contact the debtors in order to verify whether they exist or not. You might want to confirm from the payables what amount is the obligation of your client. So these are the third parties which are a great source of evidence. So the bottom line or the shortcut is we will apply this AEIOU on DA3. We will apply analytical procedures, inquiries, confirmation, inspection, observation, recalculation on directors, assets, documents, accounting books, third parties, in order to verify the exam question, in order to verify either EVCR or we want to verify COCA. So either the examiner will come up with a story which is associated with statement of financial position, that is EVCR, or the examiner might want to come up with a story with a situation which is more narrowly focused towards the statement of profit or loss account, which is called COCA. Okay. Okay, guys, before I move on to a past paper question on substantive procedure, I would like to highlight what kind of exam question you can expect on substantive procedure. The substantive procedures could be tested in two ways. Substantive procedures are examined by the examiner in two ways. Number one, examiner is going to ask you to describe substantive procedures without any background information. Without any background information means that that particular question will not have any story whatsoever. That particular question will not have any scenario. So there won't be any scenario. No scenario. This is a knowledge based kind of a thing. So examiner will say, describe the substantive procedures you would perform in order to verify the revenue of the company. Describe the substantive procedures you need to perform in order to verify the non-current assets of the company. There won't be any background information. There won't be any story. So you need to apply the procedures simply from your bookish knowledge. But this will be of 5 marks in the exam. Not more than that. 5 marks. On the contrary, examiner is also going to ask you substantive procedures with story, with a background information, with a background. And when the examiner is going to come up with a background, this will generally be approximately minimum 15 marks. So overall, at least these are the minimum thresholds what I've expressed. At least 20% marks will be from substantive procedures, and then you add 3-4 MTQs regarding substantive procedures. So the substantive procedures will easily go on at 30% of out of your total exam. Now there are two ways examiner is going to test. Number one, without any background information. Number second, with a background information. Okay, before we move on to a past paper question, before we move on to the questions which we need to solve today, let's explore few things. If I would say that you have to perform substantive procedures on the receivable balance, what you are going to do? See, there are certain sources of evidence which are going to create ideas in your mind. If you want to verify the receivable balance of Ahmed company, you should think about the age receivable analysis maintained by Ahmed company. Maybe you would like to inspect the age receivable analysis. You would like to identify any slow moving or very aged receivable, and maybe you want to have a discussion with the client that this particular receivable needs to be written off. Or maybe you might want to figure out certain old receivable out of the age receivable listing, and then you want to have review the correspondence between the client and those receivable. Maybe there is a dispute going on, and that is why they are not paying and they need to be written off. So you see, receivable listing, age receivable listing is a very important source of evidence when it comes to receivables. Similarly, if you want to verify the receivable balance of your client, don't you think that the sales invoices are an important source of evidence? Maybe you would like to select a sample of receivables which have been recognized by Ahmed Company Limited at the year end. You would like to select a sample of it, a sample of receivables. Now, if you want to make sure that whether these receivables are true, whether these receivables do exist, you would like to follow them, or you would like to match them, the corresponding good dispatch note and the sales invoice. So if the good dispatch note is there, if the sales invoice is there, it means those receivables are not fake, they do exist. Even the sales invoice could also verify the valuation of the receivable. If the receivable has been recognized at 5,000 and there was only one transaction, but the invoice says the amount was 4,000, so it means the receivables are overstated. So you see, receivables can be verified through sales invoice, through good dispatch note, through age receivable listing. Similarly, there is a thing called circularization. This is very important. Circularization. What does circularization means? As an auditor, you are going to draft letters. You are going to draft letters and you are going to send those letters to the debtors of your client, to the receivables of your client, and you will ask them to verify whether they exist and whether the amount which is owed is true or not. So receivable circularization is a process in which the auditor tends to circulate letters to the debtors of its client in order to verify a couple of things. A, the client does exist, the receivable does exist, and secondly, sometimes we also try to verify the amount out of those letters. Similarly, another source of evidence in order to verify receivable is post year-end bank statement. So just imagine you are auditing Ahmed Company Limited and they have recognized 5 million receivables of 5 million. Out of those 5 million, one of them is from company X and the value is 1 million. If that 1 million does exist and if the valuation of 1 million is correct, after the year end, that is the post year end, that is, let's say the year end is December, so let's talk about January or February, that amount of 1 million should have been received by the client after the year end. So as an auditor, you might want to inspect the post year end bank statement and cash day book as well in order to verify whether that receivable have actually been converted into cash. If it has converted into cash according to the bank statement and the cash day book, it means that receivable was true, that receivable does exist, that receivable was correctly valued, no problem whatsoever. Another source of evidence when it comes to receivable is the allowance for the doubtful debts. So if the client has created an allowance for doubtful debt, you might want to have a discussion with the client and you might want to understand what assumptions they have used. You might want to understand the assumptions are reasonable considering the overall industry situation. You might want to compare the allowance for doubtful debt with the last year's allowance. You might want to consider whether the last year's allowance was appropriate, whether the actual bad debts in the current year was according to the allowance they created in the last year. That will give you some insight whether they are creating appropriate allowance or not, whether the assumptions they are using are to be trusted or not. So this is how you are going to get evidence for the sake of receivables. As a student, you should be familiar with all the sources of evidence, because whenever you are short of ideas, these sources of evidence are going to help you in a great way. Okay, another way of developing the substantive procedures. I need to ask a question from you, and that is receivables. From which family does receivable belong? Options are statement of financial position, statement of profit or loss. Receivables are from the statement of financial position. Now the question is, what assertions do we have regarding the statement of financial position? And the assertions are E, V, C, R. Now how can I verify existence? I need to verify whether the 1 million receivable does exist, yes or no. I've got a doubt in my mind. As a skeptic, my attitude is skeptic, so I've got doubt. I don't know whether the receivable does exist or not. So in order to verify the existence of receivable, I would like to inspect the post year-end bank statement and cash day book. If the receivable has been converted into cash, it will be reflected in the bank statement and cash day book. So I would like to inspect the post year-end bank statement and cash day book in order to verify that receivable does exist, because if that receivable does exist, it will be reflected in the bank statement after the year end. EVCR, I need to verify existence. Another way of verifying the existence is I will select a sample of year-end receivable and I will match them, or I will follow through them by recognizing whether the sales invoices have been generated and whether the corresponding good dispatch note have been issued. If the invoice have been generated, if the good dispatch note have been issued, it means that receivable is not fake, that literally exists. EVCR, let's talk about the second one, valuation. How can I verify the valuation of receivable? First of all, I'm a very skeptic person when it comes to auditing. So I've got a doubt in my mind what if the year-end receivable recognized by the client, let's say 4 million, is overstated? What if there is an arithmetical mistake? So the first procedure which comes in my mind when it comes to the valuation of receivable is the first procedure which comes in my mind regarding the valuation is EVC, is I would like to get the obtain the schedule of the receivables at the year end. I would like to get the breakdown of the receivables recorded by the client at the year end. So I would say, dear client, you have recognized 4 million receivable as a current asset in the statement of financial position. Okay, fine. Please share me the details. Please give me the breakdown of it. I want to know each and everything regarding this 4 million. I want to know how you have calculated this 4 million. Okay, fine. 1 million plus 0.5 million plus 0.2 million plus 0.3 million plus 1 million plus 0.5 plus 0.3. So I need to get the details. So obtain the schedule of the year-end receivable from the client and cast it and recalculate it, plus minus it, add them up again, whatever wording is suitable with you. So obtain the breakdown or obtain the schedule of the year-end receivable from the client and cast them in order to verify the arithmetical accuracy. And once you verify the arithmetical accuracy, the valuation is confirmed. It's one and the same thing. EVCR. In order to verify, another way could be that maybe you would like to select few samples of receivables from the client's statement of financial position, and you would like to inspect the corresponding sales invoices just to make sure that there are no arithmetical mistakes in the sales invoice, and if the discounts have been awarded, they have been awarded according to the company's policy, and there are no mistakes when it comes to discount. I've got apprehension in my mind. Maybe the discount was, the customer was eligible for 10% discount, but you have awarded 20%. So maybe the receivable is not correctly stated, the valuation is not correct, and that has got to do with the discounts. So another way of, in order to verify the valuation is the discounts. Okay, EVCR. Now I need to verify completeness. Generally speaking, when it comes to assets, and receivable is an asset, completeness is not an issue, because all over the world management is going to recognize extra things. They're not going to omit anything when it comes to assets, because they want to make sure that their financial statements are as healthy as it could be. So completeness is not an issue here, but still let's talk about completeness. See, I will not select a sample from the receivable balance at the year end. No. I will not select the sample because those are already recorded. I will select a sample of, from the good dispatch notes. Select a sample of good dispatch notes. Follow through. Trace the corresponding sales invoice. Okay. If the good dispatch notes are there, their invoices should be there. And if the sales invoices are there, the corresponding receivable should also be there. So you are not selecting the sample from the receivable itself, you are selecting the sample from the good dispatch notes. And once the good dispatch notes have been selected as a sample, the corresponding sales invoice and the corresponding receivable must be recorded. And this is a procedure regarding the completeness of receivable. Last but not the least, the rights and obligations, the ownership. How are you going to verify whether those receivables are the ownership of your client? I think the good dispatch notes and the invoices can verify that. I think the post year-end bank statement and cash debit can verify that. If the money has been received by my client, that reflects that those things are the property of or the ownership of my client. So, dear students, I have tried to develop substantive procedures in front of you by using number one, evidences, that is the data 3. I can have a discussion with, okay, fine, another way of developing the substantive procedure. Let's talk about data 3, DA 3. Have I used directors as of now? Have I used directors as of now in order to verify the receivable balance? No, I think I have not used directors. So let's use directors. What I'm going to do, let's have a discussion with the directors regarding the allowance for the doubtful debts they have used and see how reasonable their assumptions are. So I would like to have a discussion with the directors regarding the assumptions used when it comes to the doubtful debts or the allowance, and make sure those assumptions are reasonable. Maybe there is a certain debtor which is long outstanding, and the client believes or the director believes that they will be get paid for that, but I've got very skeptic attitude and I doubt that they will be get paid for that. So maybe I would like to get written representation from directors regarding that particular receivable. See, I'm using directors now. Data 3, accounting books or records. Yes, you can use the accounting books. You can compare the receivable ledger control accounts balances with the control accounts, with the trial balance, and with the statement of financial position. See, I'm using the accounting books and records. Data 3, documents. I've already used good dispatch notes, sales invoices. Third parties. Yes, you can use third parties such as debtors themselves. You can use the receivable circularization letter, and through that you can verify the receivable balance. So whenever you are short of ideas, think about either EVCR. If you are still short of ideas, think about DA3. If you are still short of ideas, last option, AEIOU. Now let's try to verify receivable with the help of AEIOU. Tell me guys, have I used A as of now? Have I used A, analytical procedures, in order to verify receivable as yet? I don't think so. I think I haven't used A. So can I use A? Why not? Let's compare the receivable balance of my client for this year on a month by month basis with the last year. And if there is any significant increase or significant fluctuation, you need to have further investigation and further discussion with the client. This is an analytical procedure. E, inquiries. Have you used inquiries? Yes, you have. You just had a discussion with the directors regarding the doubtful debts, so you used inquiries. Inspection. Have you inspect anything? Yes, select a sample of good dispatch notes, follow through them with the corresponding sales invoice, and then make sure that it has been recorded in the receivables. So you have used inspection, you are using documents. Observation. Let's ignore observation. Have you used U, recalculation? Yes, you ask the management, get the breakdown of the, give me the breakdown of all the receivable balance. I would like to add them up and make sure that there is no arithmetical mistake. Even you can recalculate the allowance for the doubtful debts through the assumptions used by the client. So you can always use U as well, recalculate. I am truly exhausted because I have used each and every possible way on this planet Earth of developing substantive procedure. Is this clear? And please, I told you, don't jump to the conclusion. Don't think whether you will be able to come up with the substantive procedures of payables after 5 minutes. No, you won't be able to, guys. Don't overrate yourself. Don't create pressure on yourself. Whether you will be able to create procedures regarding payables or non-current assets, no, you won't be able to. It will take time. It's not that simple, but it's not that complicated as well. You need to have patience. Don't start imagining in your mind where how I'm going to develop procedures for provision, how I'm going to develop procedure for revenue. This will bother you. This won't help you. Take it easy. This particular topic requires your 6-7 days, and eventually you will get there. So for the last half an hour, I was just focusing on one thing, which is called receivable. And I was not focusing on receivable. I was focusing on an exam technique. This is how you are going to develop procedures. Is this clear? Anyone having any questions? Please raise your question. Sir, if they want 5 and I write 6, but one is wrong, do I get 5 marks? Okay, let me explain this one. If you are going to write 7 or 8 and the examiner has allocated 5 marks, you will only be able to score 5 marks. If out of those 7, you have got few, like let's say 2 of them are wrong and 5 are correct, the marker is going to reward you for the best 5. But please, my dear Vivek, I do not recommend this approach. Please, if the examiner has asked for 5 marks, please take a moment, sit back, don't panic, and just write the 5 procedures which are required according to the marking scheme. If you are done with the full exam and still you have got time, yes, you can always add the 6th or the 7th or the 8th or the 9th or the 10th procedure, but only if you are having extra time. But first of all, you need to complete the full paper according to the marking scheme by not writing anything over and above the marking scheme. Is this clear to everyone, this particular thing? Because this is important. Group link will be provided to you, don't worry. Okay, so Barbara has asked what is the difference between recalculation and reperformance. Okay, dear, when it comes to recalculation, I'm not using my assumptions. I'm just trying to figure out the arithmetical accuracy. I'm just trying to make sure that 5 plus 3 is equal to 8 and 8 plus 4 is equal to 12. So there is no arithmetical mistake. That's recalculation. But when it comes to reperformance, I might be applying my own accounting standards, my industry knowledge, my concepts, and my relevant entity specific knowledge, and some my own assumptions in order to figure out the, let's say, goodwill, let's say, in order to calculate the provision. So when it comes to reperformance, there could be slight difference between my calculation and the client's calculation. But if there is significant difference, it means the client's calculation is not correct because I am the superior authority here. Yes, Priyanka, presentation and disclosure assertions are also relevant, but as they are not extremely important and not that examined, I kind of skip them. Okay, just a humble request to review that I have sent the contact number in the respective. Okay, if you have sent the number today, you will be added in the group after like 4 or 5 hours. Don't worry, you will be added eventually. And can you please send me a reminder again? I will do it after the class. So, sir, could you please repeat the cutoff? Yes, I can repeat the assertion cutoff. Cutoff means that you need to recognize anything in the correct accounting period, specifically those things which have got to do with the profit or loss account. So you need to recognize revenue and the expenses in the correct accounting period. You cannot accelerate revenue and you cannot defer expenses. All over the world, the management wants to defer the expenses. They do not wish to recognize in this period. That's not the proper usage of cutoff, and they want to recognize revenue early, so that revenue is not associated with this period, but they want to recognize here. So this is cut off. Is this clear? Is this clear, Prana? What is correspondence with suppliers, debtors? Okay, correspondence is an extremely important and a powerful terminology. If I am auditing Suresh company, so the discussions, negotiations, chit chat, the emails between Suresh company and their debtor is the correspondence. As an auditor, I would like to review the correspondence between you and your debtor, between you and your insurance provider, so that I can understand and I can realize how things are shaping up. Are you going to be get paid, or are you going to be get the charges will be, you maybe you need to pay certain compensations. So the correspondence is an important source of evidence. Asma, I hope I replayed the slide which you are talking about. I hope I did. AEIOU, DADA3, and the assertions I did. What is the, or which is the most reliable source of evidence? Remember, the most reliable source of evidence is the one which is generated by the auditor himself or herself. The original documents are always reliable. Anything which you have obtained from the client is not that reliable. Any evidence which is obtained from the third party is much more reliable as compared to the evidence obtained by the management. Okay, Asma is asking, can we get this lecture sheet? Asma, why not? Why not on this planet Earth? Yes, Abdul Muhid Haider, you're absolutely right. Trace it to good dispatch notes. That's the way of doing it. That's the way of thinking it. You are going in the right direction. Sir, for the valuation of receivable, can we reconcile the receivable ledger with the customer individual accounts? Absolutely gold. Absolutely gold. Moreover, you would like to end up reconciling it with the statement of financial position and trial balance as well. Well done. Can we verify existence by tracing receivable to good dispatch note? Yes, because if the good dispatch note does exist, that means that receivable is not fake and that receivable does exist. Abdul Mohit, you're right. Okay, Sharik Tayyab is unfortunately unable to listen to the audio. Okay, another powerful question by Priyanka, and Priyanka is asking, is IFRS 15 revenue relevant? Okay, this is a good question, and where is my list of standards? I need to add one standard in it. Okay, IS 1, IS 2, IS 10, IS 16, IS 36, IS 37, 38. These are the list which I mentioned, I think yesterday or day before yesterday. Yes, you need to add IFRS 15 as well. IFRS 15 is about revenue, and revenue has got to do with receivables, so it is relevant. So for example, the good dispatch note was sent on 5th January, although you received the order on 27th December. You are not supposed to recognize revenue on 31st December because the performance obligation has not been transferred according to IFRS 15. That's it. Sir, how to tackle assertion specific procedure? And will we get 2 marks if we mix two procedures in one? No, not at all. You are not going to get 2 marks. Never ever. Like unpresented and uncleared checks in case of bank. No, don't mix them. If you believe they are two different things and they can verify two different things, do not amalgamate them. For any substantive procedure, even if it has been downloaded direct from Mars or Venus, you are not going to get more than 1 mark. So don't try this at home, at college, or in the exam center. Sir, if the examiner mentions specific assertion and requires 5 procedures, how to complete procedures related to single assertion? My dear Hamid, in that case, you are going to apply what? In that case, you are going to apply the techniques which I expressed. You are going to think, have I used data? Have I used AEIOU? Have I used all the assertions? So this is how you are going to develop. You are going to create ideas. If the examiner becomes specific out of nowhere, you need to think about the assertions, you need to think about the procedures, you need to think about the sources of evidence. That is, those evidence are going to help you out in creating the procedures. And last but not the least, Hamid, all of you, including me and Hamid, we need to have patience. It will take time. This is not a topic which will be covered just like that. It will take time. Sharik, you are absolutely right. Recalculation is for figures just to make sure that the arithmetical accuracy is right on top. There is no arithmetical mistake. You're right. Absolutely right. Okay. What does John Friday has to offer? Can the cutoff assertion be affected by the accounting basis, cash and accrual? No, not really. You are not going to use cash basis. You are going to use normal traditional accounting basis. Okay, what Idrisa has to say, please share with this. Oh yes, I will share this document. Don't worry, don't worry. Mohammed Kaba, you don't have to share your number. The support team, the ACCA team will share my number, and then you are going to send me a text saying hello, and I will directly share you the link. Do not worry about it, and you'll get all the relevant stuff in the group. Don't worry. Go over analytical procedures again, receivables. Okay, why not? So you are my audit client, Mr. Sharuna. You are my audit client, and you have recognized the receivable balance, let's say of 2 million. Well, I've got doubt this receivable balance could be overstated. So what I'm going to do, I will compare the receivable balance of my client with the last year's receivable balance, specifically on a month by month basis. And if there is any significant fluctuation in the receivable balance, specifically in the last quarter or so, I would have discussion and further investigation. I would like to have further discussion with the client, and I would like to I would seek further explanation from the management regarding this. This is how you are going to apply analytical procedures. Can you relate cutoff with audit risk? Yeah, if the remember, all those assertions have got to do with audit risk. If these assertions are not correct, if EVCR and COCA is falsified, as a result the financial statements becomes materially misstated, and once the financial statement becomes materially misstated, the incorrect the chances of expressing incorrect opinion is on the higher side. So automatically they all are related to audit risk. Okay, let me quickly wrap this up. Could you please explain how to connect substantive procedure with scenario? That what I am going to do to after half an hour. Please hold on. For sir, for typing practice, can we have to do all question from exam kit or some selected question? Well, go for maximum question. At the end of 5th day, I will also give you a plan for the next 30-40 days. Moreover, please use a platform called typing.com. This is a platform not endorsed by Mr. Ahmed. This is a platform endorsed by ACCA. There is a website called typing.com. Sign up to that just like you sign up for Instagram. Make a free account just like you make a free account on Instagram, and then start following the lectures. Instead of investing 2 hours per day on the social media platforms, try to invest 1 hour per day on typing.com, and after a month or so you will be equipped with an asset, an absolute asset, which is called typing speed. Sir, can you explain correspondence? Correspondence is the discussion between your client and your client's receivable, payable, supplier, insurance provider. Why you are interested in correspondence? Because after reviewing or reading through the correspondence, you might be able to get some valuable insights regarding the situation. In many of the marking guide for triple AA paper, marker says that the procedure is general procedures. So marked 0 as they are not linked with the scenario. So how to link to the scenario? Khushi Sharma, in order to answer this question, I need to open up a past paper question, and I am going to do that, but can you please wait for half an hour? I will do that. Sir, can we confirm completeness by analytical procedures? Yes, we can. Can we reduce the quantity of the evidence if it is higher quality? Yes, it's a knowledge-based thing which Mr. Shabbar Raza is asking. If you have got high quality audit evidence, you might be able to compromise on the quantity. High quality can compromise or the quantity, but more quantity cannot compromise or cannot compensate quality. Should we use analytical procedure where control risk high? No, that's not a rule or something. Analytical procedures other than comparing with the last. Sir, analytical procedures for receivable other than comparing it with last year? Yeah, it could be. You can compare your receivable with the revenue figure. If the revenue is going down, how come your receivables are going up? Beautifully described, Charik. Thank you very much. Sir, can you compare last year? Yes, I can compare. Are you still using the March AA group? No, I'm not using the March AA group, although I'm still part of that group, but I do not use it. On and off, I do use that particular group just to motivate students, but for this particular webinar, there is a separate WhatsApp group and you need to join that one. Do we need to mention ISAs in our exam? If I will be obliged or offered to attempt audit and assurance paper tomorrow morning, trust me, I'm not going to use. If I'm going to use it, maybe hardly on 1 or 2 occasions, hardly on a sentence or 2. So instead of focusing on auditing standards and their names, try to get the concept and try to practice according to the exam technique. I hope this answers your question, Mr. Sajjad. Good question though. Sir, will there be substantive procedure related to non-profit organization? Why not? It can be. In the last webinar, Abdullah, in the last webinar, I solved a question called insects for you. In the question insects for you, I solved a question on substantive procedure regarding the revenue of a not-for-profit organization. If you are interested in that, go back to the webinar day 4, probably day 4 of the March 2021 webinar, and you can go and have a look at it. Bank confirmation on behalf of client is also a correspondence. Actually, bank confirmation is a letter obtained directly by the auditor. So I won't say that it is a correspondence. It is an evidence which you are obtaining or getting by your own. So if the bank and the client is having a discussion regarding the renewal of a loan, and if you would like to review that correspondence or those emails or those discussions or those minutes of the meetings, that's a correspondence for you. Do you provide mock exam market and provide feedback? Well, I'm loving your question, Miss Suresh. I always encourage students to make sure that they get their paper marked. If your mock is not marked, your exam success is not guaranteed, nowhere near it. If you want to pass this exam, you have to make sure that at least one complete full mock exam is marked by your tutor. So first of all, you have to make sure that you start contacting your tutor now, and you need to say hello to him from my side as well, and you need to request him or her that please, for God's sake, you need to mark one mock exam at least 1 week before the exam. If that is the case, good for you. If you're not having any marker, that's a sad story and a separate story, then I might be able to help you out. Mr. Sharik, I will try. What if you mark my mock? Sharik, I will try. But first of all, you need to approach your tutor, because your tutor might understand you better. You might be able to understand your tutor terminologies in a far better way. So your tutor is the right person or more appropriate person. Okay, I think that is enough for now. I will come back to your questions later. Mr. Arslan, definitely you will get it. What you have to do is that you need to write this question in the WhatsApp group after the webinar. Don't do it for now. And somebody, maybe Bakar, Bashir, or someone will send you the relevant link, because he also mentioned the link in the group yesterday as well. So you will get the lectures link. Don't worry, don't worry. Okay, let's continue, guys. Let's continue. Okay, I'm done with the receivables. Now, what about payables? If somebody is done with receivables, I think if you are having common sense, you can come up with the payable story by yourself. Same old story. AEIOU, EVCR, and DA3. Just like the age receivable analysis, you might want to review age payable listing. Just like the sales invoices, purchase invoices could help you out. Just like the good receive note or the good dispatch note. Now it's time for the good receive note. Just like the post year end bank statement, there you are looking in order to verify whether in the post year bank statement the payment has been received. Now you would like to evaluate whether in the post year end bank statement the payment has been made. Similarly, there is a statement called supplier statement. What is supplier statement? It's a statement sent by the client to their suppliers in order to make sure what business they have come up, what transactions have they been gone through. So that's a supplier statement. And similarly, just like the receivable circularization, there is called supplier circularization. So I hope you are comfortable with these evidences, and you might be wondering what procedures could be made. Yes, you can compare, you can get the breakdown, you can verify the year-end supplier balances with the supplier statements. You can verify the suppliers balances with the post year-end bank statement in order to verify the same amount has been paid. In order to verify year-end supplier balances and the existence of suppliers, you can circulate supplier circularization. In order to verify the supplier payable balance, you can select a sample from the payable balance and follow it up with the purchase invoice, and with the good receive note. And the other way around could be is also possible. Select a sample from the good receive note, then follow it through the purchase invoice, and then follow it through the payable balance. So if you are comfortable with that, I believe you are comfortable with this one as well. There is no rocket science. Are you comfortable with this one? Can I have yes in the question box, so that I could feel a little more confident? Oh, I'm loving it. Thank you very much. Thank you very much. Yes, yes, definitely. Yeah, you need to practice. You need to keep it calm. You need to keep your calm. Don't worry. Nobody is asking you to attempt a past paper question and pass that particular past question in about 1 hour. Nobody is asking you to do that. We have got solid 38 days, and out of those 38 days, half of the days can be devoted to this substantive procedures. And once we have got the grip on substantive procedures, we will pass this paper. Okay, so thank you so much for this. Yes, let's continue. And let me tell you one more thing about this comfortable thing and this practice thing. All those students which have answered me, once you are going to practice it, once you are going to solve questions over and over again, same set of questions over and over again, I'm not saying that you are going to cram the answer. I'm not saying that, but you will be able to realize that there are certain procedures which are applied in every situation, and there is a certain way of applying certain procedure in any given situation. You will realize that if I need to apply procedures on receivable, on payable, on non-current asset, on inventory, on revenue, in each and every goddamn case, you will obtain the schedule from the client and you will cast them in order to verify the arithmetical accuracy. You will get the breakdown of the receivable, the breakdown of the revenue, the breakdown of the inventory, the breakdown of the bank and cash balance, the breakdown of the receivable, payable, and each and everything. So after a point of time, you will start realizing that the out of 20 marks, this 15 to 16 marks are a walk in the park. All you need is a sensible, wording, and that will be developed over the period of time. So don't worry. Let's discuss another thing, non-current assets. Okay, what do you think about non-current assets? When I think about non-current assets, there are certain things which come in my mind. The non-current asset register, those non-current assets which have been purchased during the year or before the year end, the invoices. Maybe there are certain disposals, so I would like to inspect the sales invoices as well. Even if it's a purchase or a disposal, the bank statement and cash book is relevant. If there are certain assets in the non-current asset register, so this is my non-current asset register, there are certain assets in it, I need to verify whether those assets are present in the premises as well. So physical assets. If let's say there is a car parked outside my office and I'm claiming this car belongs to my company, are you going to blindly trust? If a car is parked outside the company, even if that car is branded with my company's name and logo, there is a branding over that car, are you going to trust that car belongs to the company? No, you would like to verify the ownership of that car. Maybe you would like to verify the title deeds of the property. Maybe you would like to verify the registration document of that particular car. So maybe that car is a rented one. So when you are going to verify the registration document, you will be able to verify the ownership of that or the rights of that particular non-current asset. When it comes to non-current asset, there is a very important thing called depreciation. And when it comes to depreciation, there is an important thing called useful lives and the assumptions used in the useful lives, the depreciation expense, the calculation of depreciation expense, the methodology used, the straight line method or the reducing balance. So all these factors are sources of evidence. Are you having butterflies in your stomach? Are you thinking that you might be able to construct few procedures? So first of all, why don't we get the breakdown of the year-end non-current asset from the client and cast to ensure arithmetical accuracy? All those additions and disposal have been correctly accounted for. So this is one procedure. Maybe you would like to have a discussion with the client regarding the useful lives and the depreciation policy and make sure those assumptions are reasonable under the given circumstances of the industry and the COVID situation, blah, blah, blah. Okay, just imagine now I'm trying to upgrade your level. Please concentrate. Please concentrate. What if the examiner expresses through a story that during the year there was a significant loss on disposal? What does that mean? If there was a significant loss on disposal, there is a huge possibility that the depreciation rates applied by the client, the estimates regarding the useful life, and the depreciation policy, the method, they are not appropriate. So maybe you would like to have a discussion with the client. Maybe you would like to get written representation from the client, the confirmation in writing from the director. Maybe you would like to review the capital expenditure budget or the capital replacement plan of the client, and through which you might be able to verify whether the estimates regarding the useful lives are correct or not. Maybe you would like to select a sample from the non-current asset register, and you would like to verify whether those assets does existence. Other way around, you would like to select a sample from the premises, and then you would like to verify that those assets have been incorporated in the non-current asset register. That's completeness. Now I'm thinking EVCR. EVCR. So if you are going to select a sample from the non-current asset register and you are going to verify by the physical inspection, that's a procedure of existence. Now you can turn it around, other way around. You can select a sample of non-current asset which are present in the warehouse or in the factory in the working condition, and then you can verify them in the non-current asset register. That's completeness. If you are going to get the breakdown of non-current asset register and cost it, that's valuation. For the new additions made during the year, you need to verify the corresponding purchase invoice, because those assets have been purchased. In order to verify the rights, in order to verify the ownership, you might want to inspect the title deeds if it's a property. You might want to inspect the registration document if it's a car. And if it is a laptop, the laptops do not have registration documents. The laptops do not have title deeds, but the laptops does have a purchase invoice. So I would like to inspect the purchase invoice in order to verify that there is company name over it. Is this clear? Last but not the least, the disclosures are very important as well. You might want to review the related disclosures regarding the property, plant, equipment, and you need to make sure that they are adequate in accordance with IAS 16. Yes. Okay, if I want to, I can straight away move to a past paper question right now, but I'm trying to help you here. As far questions are concerned, we will solve questions today, and we can solve questions tomorrow as well, and we can have questions from the last session's webinar. But I'm trying to develop your basics. I'm trying to build a foundation. Once the foundation is there, once the base is there, the number of questions does not matter. For the number of questions, you have got a month to go. So let's talk about another thing, which is called revenue. If I want to, I can straight away go to the past paper question right now, but I'm trying to build a foundation. Let's talk about revenue. Somebody requested me, I think Mr. Hamid requested me regarding revenue yesterday. So let's talk about revenue. So my client has recognized a revenue of 10 million, and I'm wondering whether it is correct or not. What are the assertions associated with revenue? Coca. So what should I do? In order to verify the completeness, I think I need to select a sample of good dispatch notes, follow it up or follow through with the corresponding sales invoice, and then make sure that they have been recorded in the sales daybook. So that is going to verify completeness. Now, in order to verify occurrence, I'll do the other way around. I will select a sample of revenue from the sales daybook, and then I will verify the corresponding sales invoice and the good dispatch note. If the good dispatch note is there, it means that transaction did occur. So we are done with C, we are done with O. Let's talk about cutoff. Select a sample of good dispatch note from both the pre-year end good dispatch notes and the post-year end good dispatch notes. Why I'm selecting from the pre-year end? Why I'm selecting from the post-year end? Because I will follow through and I will trace them. The wording is I will trace them. I will match them. Those good dispatch notes which have got to do with the pre-year end should be recognized in the year-end revenue. And those good dispatch notes which I selected from the after the year end should not be recognized in the revenue. This is how you are going to verify cutoff. In order to verify accuracy, you can simply get the breakdown of revenue, cast them to ensure that arithmetical accuracy is there. In order to verify revenue, you can also make sure that the revenues or the sales invoices are according to the company price list, according to the company policy. If there has been any discounts allowed, they have been correctly accounted for, something like that. Now, what source of evidence you need to be familiar with? Revenue control account. Somebody also mentioned me a few moments ago that can we, reconcile the control account balances with the revenue? Yes, control accounts. The sales day book I've been using, the sales invoice I just used, customer contracts, good dispatch notes, sales orders. Is this clear? Is this clear to everyone? I hope it is. Similarly, you can verify the procedures for inventory, the bank and cash. Let's quickly talk about bank and cash. I would like to move to a past paper question and I need to wrap it up. What about bank and cash? In order to verify bank and cash, a very important source of evidence is bank confirmation letter. It's a letter directly obtained by the auditor from the bank. Another very important source of evidence is bank reconciliation performed by the client. You might want to make sure that there is no arithmetical mistake. If there is any discrepancy that have been resolved, cash book, you need to verify things from cash book, from the bank reconciliation, from the trial balance, from the statement of financial position. The bank statement is a statement sent by the bank to the client, maybe on a monthly basis, maybe on a quarterly basis. Loans, in order to verify loans, you might want to review the loan agreement in order to verify the terms and conditions and the amount. You want to verify the same amount through cash book. If certain amounts have been repaid, you need to verify those amounts through bank statement and cash book. You might want to verify if there is any covenants or restrictions and attached through bank confirmation letter. Intangible assets, you might want to get the breakdown of the intangible assets. You might want to verify the purchase invoices, the bank statement, so that you can verify that those expenditures have been made. These are few tricky things. Share capital, dividends, not frequently tested, but you need to be familiar with that. In order to verify the share capital, you want to verify the same amount has been recorded in the share register, the share certificates have been issued, the same amount has been recognized in the bank statement and cash day book. The boards does have the board meetings in order to verify the approval of that share capital, the recognition of that share capital. The registrar of company can verify that certain shares have been issued. In order to verify dividends, the minutes of the meetings of the board is important, because usually in the board of minutes the dividends have been approved or declared. The bank statement and cash book, whether the same amount which have been recognized have been paid or not. Any amount which have been recognized. Is this clear? Any further question before I move on to the past paper question? Yes, you can recalculate the loan in order to verify the finance cost. Well done, you are thinking absolutely straight. Can you show inventory? Yes, you all can get this lecture sheet. I will share it right away in the group after once I'm done with the lecture. Where is inventory? Yes, here is inventory. Just like age receivable analysis, you can get age inventory listing, and you can identify or spot any old item. That old item might be an obsolete item, and you might want to request the client that remove this item from the stock, from the inventory. Similarly, you might want to verify the post year end sales invoices for certain particular items of inventory, and you need to verify whether the sales invoices, in order to verify whether the NRV is below cost or above cost. NRV, what does IS2 says? Inventory should be valued at lower of cost NRV. So through NRV, through sales invoice, I would like to verify the NRV and would like to compare it with the cost, and if it is below cost, the inventory needs to be written off. The relevant adjustment is required. Inventory count sheets will also help you in order to quantify the stock at the year end. You need to verify whether you would like to get the breakdown of the cost per unit, and you would like to make sure there is no non-production items have been incorporated. What does IS2 says? Again, IAS2 says that inventory should be valued at full production cost. So you cannot incorporate non-production items in it. Is this clear? Okay, if this is clear. 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 Okay, if this is c Let's go to the questions now. It's time to solve a question. So I have highlighted few questions. Number one, Elunda. Number second, Pineapple Beach Hotel. And for day 4, I've got few more questions on substantive procedures. And my dear students, here is a great news for all of you. All over the world, wherever ACCA students are, the talk of the town, the most debatable topic is substantive procedures. And how many substantive procedure questions we are going to tackle in this particular session of webinar? 5. 2 today and 3 tomorrow. 5. But the great news for all of you is that in the last webinar, that is the March 2020 webinar, there are another 5 questions. And all those 5 questions are different from these 5 questions. So in short, you can have 10 questions on substantive procedures for the sake of typing practice, for the sake of a bit of learning, for the sake of developing my style of substantive procedures, and then eventually you will be comfortable and you will be able to tackle it. Okay, so 5 questions today and tomorrow. Then once you are done with all the webinars, you are going to attend the day 3 and day 4 of the webinar from the March 2021, and there you will find brand new 5 questions. So 5 questions here, 5 questions there, and the power of 10 will eventually lead you to the success. Okay, let's start the day 3 questions. Let's straight away go to the okay, here is the question. After Elunda, we can have a break for 10 minutes. Okay, so let's stick to this. Then we'll have a break. Don't worry. Requirement: describe substantive procedures you should perform to obtain sufficient appropriate audit evidence in relation to the above 3 matters. I told you there are 2 types of exam questions when it comes to substantive procedures. A, without story, and I think you all are comfortable without story kind of a question. You don't have to relate your substantive procedure with the story. B, you have to apply substantive procedures according to the story. You need to evaluate the background. Okay, before we move on to the question, this is a summary. Please concentrate. How to develop substantive procedures? There are 5 possible ideas according to me. The power of 5. Idea number 1, think about AEIOU, and that will help you in developing the substantive procedures. Idea number 2, think about assertions such as EVCR or COCA in your mind, and that will help you in generating ideas. Idea number 3, think about the sources of evidence such as DA3, and that will help you out in generating the substantive procedures. Idea number 4, get clues or hints or ideas from the story itself. So once you are going to read the question, you might be able to get ideas. If the examiner is talking about profit or loss on disposal, it means the examiner wants me to apply a procedure on loss on disposal. The examiner wants me to apply the procedure on the useful life and discussion regarding the depreciation policy. So the examiner is going to give you hints or clues in the question, and that will help you in creating the substantive procedure. Last but not the least, the 5th idea of developing the substantive procedure is you need to think about the relevant accounting treatment and try to verify it. So if the examiner is having a discussion regarding the inventory, you need to think that what does the standard of inventory says. The standard of inventory says that inventory should be valued at lower of cost, NRV. So you might want to verify the NRV. You might want to verify the cost. So this is how you are going to develop procedures. If you are comfortable with these 5 ideas, the power of 5, you are not going to face any problem. Okay, part A again. Describe the substantive procedures you should perform to obtain sufficient appropriate audit evidence in relation to the above 3 matters. Okay, let's start reading the question. Elunda company manufactures chemical compounds using a continuous production process. Its year end was 31st July 2016, and the draft profit before tax is 13.6 million. You are the audit supervisor and the year-end audit is due to commence shortly. The following matters have been brought to your attention. Okay. The first story, 5 marks. So 5 procedures. Revaluation of property, plant and equipment. All of a sudden I'm thinking EVCR, because property, plant, equipment has got to do with the statement of financial position, but maybe it has got to do with the depreciation expense as well. So I'm thinking about COCEC as well, and I'm thinking about I-16 because that's the relevant accounting standard for property, plant, equipment. I'm thinking about AEIOU. So ideas are popping up in my mind. Let's start reading the question. At the beginning of the year, management undertook an extensive review of the company's non-current asset valuation, and as a result, decided to update the carrying value of all property, plant, equipment. The finance director, Peter, contacted his brother Martin, who is a valuer, and requested that Martin's firm undertake the valuation, which took place in August 2015. So the year end is 31st July 2016, but that took place on August 2015. Yes, please. First of all, they have updated the carrying value of all property, plant, equipment. So maybe first thing which is which I'm thinking right now is, maybe I would like to make sure whether they have revalued all the property, plant, equipment. So because I-16 does not allow you to select few assets for the sake of revaluation and ignore few, you need to make sure that the whole class of assets have been revalued. So that could be your procedure number one. Second, these property, plant, equipment would be classified as statement of financial position at the year end. So I would like to obtain the schedule of all property, plant, equipment. Those were revalued during the year, and I would like to cast them in order to confirm the arithmetical accuracy and the valuation, and I would like to verify that amount with the trial balance and the statement of financial position. Moreover, who did the valuation? Mr. Martin did the valuation. So you would like to consider the competence, the qualification and the experience of Martin Dullman in order to make sure that the work performed by Martin Dullman can be trusted. And definitely this valuer would have given a valuation report. So I would like to value the revalued amounts with the revaluation report provided by the valuer, Mr. Martin. Moreover, you need to calculate the depreciation charge, and you need to make sure that the depreciation charge for the year has been applied on the revalued amount correctly for the 12 months, because the whole 12 months, just imagine the revaluation have been performed during the year. So what happens then? Then the depreciation charge is divided up to the date of revaluation on the old value, and after the date of the revaluation on the revalued amount. But that's not the case here because the revaluation took place at the start of the year. If there is a revaluation surplus because of the revaluation, so you need to recalculate the revaluation surplus, and you need to make sure that the client has correctly classified as revaluation surplus, because according to I-16, if there is a revaluation surplus, you cannot straight away recognize it as an income. You need to create revaluation surplus. So you would like to verify that as well. Last but not the least, you would like to review the disclosures made by the client regarding the revaluation and everything, and you need to make sure that they are in line and they comply with I-16 property, plant, equipment. Is this clear? Okay, let's see how many we are comfortable with. First, let's read the selective ones. Obtain a schedule of all property, plant, equipment. From where you are going to obtain it? From the client. revalued during the year and cast to confirm. Why you are casting it? To confirm, number one, they have not missed something out, the completeness and the accuracy of the revaluation adjustment, and agree the amount with the trial balance and financial statement. So I hope you all are comfortable with the first procedure. Second procedure, consider the competence and the capability of the evaluator by assessing through his qualification, membership of a professional body, and his relevant experience. Okay, number fourth, I'm skipping number third. Agree the revalued amounts to the valuation statement provided by the valuer. Definitely that valuer has provided a statement. I want to make sure that the same amount which has been recommended by the valuer, it's the same amount used by the client in the statement of financial position. Another procedure, and this procedure is the one which reflects good knowledge of I-16. Review the valuation report and consider if all assets in the same category have been revalued in line with I-16 property, plant, equipment, because I-16 does not allow you to select few and ignore few. You have to incorporate all of them. Moreover, agreed the revalued amounts for these assets are included correctly in the non-current asset. Make sure that the revalued amounts are now recorded in the asset register. This is another procedure. Recalculate the total revaluation adjustment and agree correctly recorded in the revaluation surplus. So you are verifying the mathematical accuracy of the recalculation. Now the depreciation. Recalculate the depreciation charge for the year in order to ensure that the assets, for those assets which have been revalued, their depreciation is charged on the correct value. Last but not the least, review the financial statement disclosures relating to the revaluation to ensure they comply with I-16. You want to make sure that the disclosures are adequate in accordance with I-16. Is this clear? Please tell me in the question box, is this clear? Once you are going to solve this question time and time again, once you will type this question 2-3 times, you will realize few connections and you will feel comfortable with it eventually. For now, please tell me, are you comfortable with it? Okay, great. Yes, 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 crystal clear, sir. Can we review the board minutes to confirm that the revaluation was approved by the directors? Well, they have contacted a valuer, so definitely it was approved. I would not suggest this procedure for now, because I believe considering the expert has been used, it is definitely approved by the board. How about brother family relation? We are not discussing any ethical issues here. I can have a discussion with the client in order to verify if there is no financial interest of that particular individual. But other than that, I need to make sure that he's competent, he's experienced, he's got the knowledge, and then I can place reliance on the work. I will send the notes via WhatsApp group. Don't worry. That's more convenient for me. Okay, let's go to the part B. Let's go to the part B. Okay, part B. Your firm attended the year-end inventory count for the company and you figured it out that the process for recording work in progress and finished goods was acceptable. Okay, fine. Both work in progress and finished goods are material to the financial statements, and the quantity and stage of completion of all ongoing production was recorded accurately during the count. Okay, fine. You don't have any issues with that. But let's continue with the question. During the inventory count, the count supervisor noted that a consignment of finished goods compound E243 with a value of 720,000 was defective in that chemical mix was incorrect. The finance director believes, that's what finance director believes. No, this is not a guarantee. The finance director believes that the compound still can be sold at a discounted price of 400,000. Now what? First of all, I need to have a discussion with the management, and I need to understand why they believe and what assumptions they are using, and how they believe that they will still be able to sell it for 400,000. I need to have a discussion with the client, and I need to verify that the NRV of 400,000 is reasonable. What assumptions they have used. For the defective chemical compound, you need to have a discussion with the management, and you need to figure it out how they believe that the NRV is 400,000 and what assumptions they have used, and are the assumptions reasonable. So that's my procedure number one. Moreover, I would like to inspect the post year end sales invoices and the bank statement and the cash book in order to verify whether the NRV is actually 400,000 or less than that. So I would like to verify the sales invoice in order to confirm the NRV of this 400,000. Number third, I've got doubt regarding this 720,000 as well. I would like to get the supporting document from the client in order to verify that this defective chemical has got to do with 720,000. What if this is 820,000? What if the adjustment which is required is not 320,000, 720 minus 400, 320, but the adjustment required is for 420,000. So I need to get the supporting documents from the client regarding the 720,000 as well. That's my procedure number 3. Moreover, I would like to review the financial statements and would like to make sure that the client has correctly charged 720,000 minus 400,000, that is 320,000 in the profit or loss account. They need to write off the 320,000 from the current assets, that is inventory, and they need to charge it. So I need to follow through, and I need to make sure that the correct adjustment has been made by the client. Last but not the least, I would like to review the financial statement disclosures regarding the inventory, and I would like to make sure that they have correctly disclosed the whole situation in accordance with the International Accounting Standard 2 inventories. Is this clear? For now, I have fully focused on the procedures regarding this defective thing, but you can have a procedure or two on this as well, such as obtain a schedule of all the raw materials, the finished goods, the work in progress, and cast them in order to ensure the completeness and accuracy, and verify it or match it with the trial balance and statement of financial position. Are you familiar with this procedure? Yes, you are familiar. Please, students, read this procedure. Read this procedure. This is a procedure about property, plant, equipment, not about inventory, but read it for my sake. Try to grasp something. Try to understand what the auditor is doing. He's getting the breakdown from the client, and then he's adding them up, and he's making sure that the same amount is recognized in the statement of financial position. Now, if you're comfortable with this procedure, now read this procedure. Inventory valuation. Read this procedure now. The only difference is there are 3 different types of raw materials, finished goods, and work in progress. That's the only difference. Otherwise, the logic is same. Are you comfortable with this procedure? Moreover, when it comes to work in progress, you can recalculate the work in progress by verifying the degree of completion. In order to verify the work in progress, you can visit and you can physically inspect the inventory. You can get the supporting documents. Please now start reading these procedures. This is a very easy and a convenient procedure. Remember, I told you one of the source evidence is age inventory report. Remember, regarding inventory, there was a source document. Inventory, age inventory listing. Remember, so once your concepts are strong, there is no problem in developing the procedure. Review the age inventory report. Why you are reviewing the age inventory report? Because you want to identify any slow moving item. Once you have identified a slow moving item, what you are going to do then? You are going to have a discussion with the management that, my dear management, you need to write this off. This is a slow moving item. You need to write it off. I believe this is an obsolete item, unfashionable item. So you need to write them off. What the client is going to say, they might give you a reasonable explanation. Otherwise, they are going to write it off. You might need to have a discussion with the client that an allowance is required and they need to write it off. So are you comfortable with this particular procedure? Now, somebody asked me like 15 minutes ago that how I'm going to apply my procedures on the case study. And I said, please hold on, hang on, I will show you how. See, the question has expressed 400,000 by itself. The examiner has expressed 720,000 by itself. So one procedure should be on 400,000, one procedure should be on 720,000, and one procedure should be on the difference of the two, that is 720,000 minus 400,000, 320,000. I'm not applying any rocket science here. What I'm doing, I'm just asking the management that how this 720,000 is 720,000. I need to have supporting document. So agree the cost of 720,000 with 720,000 with supporting documents in order to verify that this is actually 720,000, not greater than that. What you are going to do regarding 400,000? This is directors believe, and you need to have a discussion, and you need to make sure that the assumptions used are reasonable. You need to make sure the post year end sales invoices are greater than 400,000, so that the NRV, because you're not valuing inventory at cost of 720, you are valuing at NRV. So if the NRV is 350, you need to value it at 350. Last but not the least, you need, or second last, you need to make sure that the correct adjustment has been made by the client. You need to make sure that they have fully disclosed the whole story in the disclosure notes. Is this clear? Can I have yes in the comment question section, so that I can be comfortable that you are all are clear with respect to this inventory thing? Fantastic, fantastic. But please realize you don't have to put pressure on yourself that you need to come up with procedures straight away tonight. No. You will develop this thing slowly but surely. You will solve questions. I will be going through 4 or 5 questions during this webinar, then 4 or 5 questions in the last webinar. Then there will be a point of time when you will be able to develop your own procedures. Well done, Tushita Gupta, well done. I would like to get written representation from the management specifically regarding that particular consignment, that they truly believe that the value is 400,000, not below that. So you should get written representation specifically about that defective chemical, because what is written representation? It's a written confirmation from the management. When do you obtain it? When there are no other evidence, and the evidence is only contained within the brain of the management. So yes, you would like to get the evidence written representation from the directors regarding that defective chemical and the NRV. Well done. Okay, let's go to the last story. Let's kill it. Bank loan. Oh, when it comes to bank loan, I would like to first of all revise and recall what sources of evidence do I have, because I don't remember anything. Yeah, confirmation letter. Yes, reconciliations. Okay, reperform the bank reconciliation in order to verify the mathematical accuracy. Yes, I can get the breakdown of the bank and cash balance in order to verify, cast them. Yes, cash book balance can be compared with the trial balance and the statement of financial position. Yes, bank statements can also be verified with the bank confirmation letter. Yes, and bank confirmation letters can be used to verify any loan, any covenants attached with the bank and balance. Okay. Now my mind is working a bit. Okay, let's read the question now. Okay, E company secured a bank loan of 2.6 million on 1st October 2014. What's the year end? Okay, it's an old loan. Repayment of 200,000 are due quarterly. So I would like to review the bank statement and cash day book in order to verify that the 200,000 have been paid, and they have been, reflected in the, maybe the client has recognized that they have paid the loan, but the bank statement and cash day book is not reflecting that. Maybe the cash day book is reflecting, but the bank statement is not reflecting. So one procedure, with a lump sum of 800,000 due for repayment in January 2017. January 2017. What's the year end? The July 2016. It means this repayment of 800,000 is due within the year. So this needs to be recognized as a current liability. The company met all loan payments in 2015 on time, but was late in paying the April and July 2016 payments. So I would like to review the correspondence between my client and the bank in order to verify if there are any late payment penalties which have been levied, and maybe the client has to recognize them. Maybe the client has to charge that expense in the profit or loss account, because those late payments could carry certain penalties or something. Moreover, you can verify the opening balance of the loan with the prior year audited financial statements. And for any loan payments made during the year, you would like to verify that from the bank statement and the cash day book. You would like to obtain direct confirmation from the bank, and you need to verify if there is any covenants or any issues. If there is any instance of non-payment, you can verify all that from the client. Last but not the least, yes, you can review the disclosure notes in order to verify that the client has fully disclosed the loan and the covenants and everything. Okay, read the first procedure. Agree the opening balance of the bank loan to the prior year audit file and the financial statement. So whatever the opening balance of the bank loan, it should be the closing balance of the last year's financial statement. For any loan payments made, so if they have repaid certain thing, you need to verify the same amount with the cash book and with the bank statement. You need to review the bank correspondence in order to verify if there is any late payment or any penalties that needs to be charged in the profit or loss account. You might want to obtain direct information from the bank in order to verify if there is any outstanding balance, if there is any amount, or any if there is any security. Review the loan agreement for details of covenants and recalculate. Yes, you would like to recalculate the current liability and make sure the client has correctly recognized it. Agree the closing balance of the loan to the trial balance and financial statement, and make sure they have fully disclosed it according to the, and they have recognized it as a current liability, not a non-current liability, according to the relevant accounting standards and local legislation. So this last procedure has got to do with the disclosures. Is this clear? Part B has got to do with the going concern. I will highlight going concern, subsequent events, and the reporting part, audit report tomorrow. Today we are only focusing on the substantive procedures. I will solve this Pineapple Beach Hotel after the break. It's 3:57 or rather 3:58 p.m. in my clock. We'll resume the class just like yesterday at 4:10 p.m. So there is a break of 11-12 minutes. And after the break, I will not start Pineapple Beach Hotel straight away. Rather, first of all, I will go towards the questions. So if you have got any questions, please post it me in the during the break time. Okay, so see you after 10 to 12 minutes. Okay, guys, let's explore few questions if there are any. Why do we need written representation when we know what the assertion mean? I didn't get your question. Maybe you are asking why do we need written representation when there are other audit evidence available? Yes, if there are other reliable audit evidence available, you don't need written representation in that case. Written representations are only utilized or used when there is unavailability of other reliable audit evidence. Shabar, please let me know if it is clear to you now. Okay, how to verify legal obligations over the loan? Through the loan agreement, and if the loan has got to do with the bank, by having a correspondence, by reviewing the correspondence between the loan provider and the client. Mr. Kabir is right, finance cost on loan, yes. Please could you make more clear with bank loans? See, when it comes to bank loan, first of all you need to make sure that you obtain the loan agreement, because after obtaining the loan agreement you will be able to understand what are the terms and conditions and if there are any restrictions or covenants attached. So that's your procedure number one. When it comes to loan agreements, you need to make sure that you review the disclosure notes, that the loan has been correctly disclosed by the client in accordance with the loan agreement. For example, the current and non-current liability split is correct according to the loan agreement, or whatever the bank loan is. You need to recalculate the finance cost in order to make sure that the finance cost is correctly charged in the profit or loss account. According to the loan agreement, you need to make sure that the current and non-current liability split is correct. Moreover, you want to obtain the bank statement and cash book in order to verify if there are certain repayments of loan claimed by the management, whether they have actually been paid to the client. Is this clear now? Sir, can you explain the procedures for prepayment and contingent liabilities? Why not? As far as prepayments are concerned, first of all, you need to compare the prepayments of this particular year with the last year. Specifically, if there is any significant fluctuation, you need to discuss with the client. As far as the prepayments are concerned, you need to seek the corresponding supporting documents in order to verify whether they are actually prepayments or not. For the prepayments, get the breakdown and cast them to ensure the arithmetical accuracy. As far as contingent liabilities and contingent assets are concerned, in the next question we'll have a food poisoning case, so there will be a case of provision, so I'll cover it up. Okay, Priyanka has asked, for inventory, can we add if they are stored at third party, we need to inspect their document as well? Yes, even we can arrange to have a visit at the third party warehouse. Sir, what can be the audit evidence for not-for-profit organization? My cross question is not-for-profit audit evidence regarding what element of not-for-profit organization? The revenue, the assets, what? So you need to elaborate. Okay, yes, Shabar, absolutely great. Sir, is it mandatory to mention assertion like to confirm valuation or existence? Yes, it is mandatory, so that the marker can be sure that what you are actually verifying through that action. I said we need to apply AEIOU on data 3, but we need to verify something, and that something is assertion. If examiner says write down 5 procedures in order to verify the existence of receivable, then you don't need to write existence. But if there is a generic story, then you need to verify, you need to mention the assertion. But if you are verifying a story, you don't need to mention the assertion. Okay, let's continue with the questions. Another question is called Pineapple Beach Hotel. Let's straight away go to the requirement. Identify and explain 4 financial statement assertions relevant to account balances at the year end. Now, what does account balance means? Hold on. Account balances. Account balances is the alternative name for statement of financial position and class of transactions is the alternative name for statement of profit or loss account. So let's read the question again. Identify and explain 4 financial statement assertions relevant to account balances at the year end. So 4 financial statement assertions, what are those? Existence, valuation, completeness, and rights. So you need to define them. So what's the knowledge base in this? You need to learn the definition of existence, valuation, rights and obligation, completeness, occurrence, cutoff, accuracy. So you need to learn all those definitions. For each identified assertion, describe a substantive procedure relevant to the audit of year-end inventory. So you need to verify the procedures in order to verify the year-end inventory. So let's start with the existence. In order to verify the existence, I will select a sample of good dispatch notes. I will select a sample of good dispatch notes and I will trace them and will make sure that they are not included in the year-end records, because those which have been dispatched by the client should not be part of the year-end records. Moreover, another procedure for the verification or for the verification of existence could be, you can select a sample from the inventory record and then you can visit the warehouse and confirm the existence of that particular stock. This is how you can verify the existence. You don't need to relate it with the story. Rights and obligations. In order to verify the rights and obligations, you can select the sample of purchase invoices and make sure that the title belongs to the company. And if the title belongs to the company, that reflects that those inventories are at the ownership of the client. How to verify completeness? In order to verify completeness, you can select a sample of inventory available at the warehouse or at the store, physically present, and then you can reconcile it with the inventory record, the other way around of the existence. In order to verify the valuation, you can get the breakdown of the inventory and you can cast to obtain the schedule and cast them in order to ensure the arithmetical accuracy. Is this clear? Let's go to the part B. Describe the substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to Pineapple Beach Hotel Company's depreciation. Depreciation. Okay. Let's read the question. Pineapple Beach Hotel Company operates a hotel providing accommodation, leisure facilities, and restaurants. You are the audit senior of Barry and Company and you are currently preparing the audit programs for the year-end audit of Pineapple Beach Hotel. You are reviewing the notes of the last week's meeting between the audit manager and the finance director where 2 material issues were discussed. So let's read the first issue, which is about the depreciation. Pineapple Beach Hotel Company incurred significant capital expenditure during the year on updating the leisure facilities for the hotel. So they invested huge amount of capital expenditure. The finance director has proposed that the new leisure equipment should be depreciated over 10 years using the straight line method. So first of all, I would like to review the assumptions used by the management in calculating the depreciation expense and the useful life, the depreciation method and the useful life. And I would like to make sure that these assumptions are reasonable and they are in accordance with the industry average. Secondly, what if they have updated the leisure facilities, there is a possibility that the depreciation should be charged on the updated value. So I need to make sure that the depreciation is calculated on the updated value. Moreover, I need to, as far as the depreciation is concerned, I need to review the profits and losses on disposal. I told you earlier, if there is significant profit and losses on disposal, that reflects that the depreciation policy is not appropriate. Because they have updated the leisure facilities, you can select a sample of new leisure equipment and recalculate the depreciation charge in order to verify the arithmetical accuracy. And you would like to have a discussion with the management regarding the 10 years useful life and the straight line method. You would like to review the disclosure notes in order to make sure that the depreciation charge and the policies has been adequately disclosed in accordance with the I-16. Okay, let's read the easier procedures first. Review the reasonableness of the depreciation rates applied to the new leisure facilities and compare to industry average. So this procedure is all about the depreciation rate. What is it? This is analytical procedure. You are comparing the depreciation rate of your client with the industry average. Another procedure, you need to review the capital expenditure budget for the next few years to assess whether there are any plans to replace any of the new leisure equipment, as this would indicate that the useful life is less than 10 years. So if the client is planning to replace the asset after 5 years or 7 years, that reflects that the useful life of 10 years is overstated. It's not correct. Moreover, if there is any profit or loss on disposal of assets disposed during the year, this will reveal whether the depreciation policy is reasonable or not. You can select a sample of new leisure equipment and you can recalculate the depreciation in order to verify arithmetical accuracy. Perform a proof in total calculation for the depreciation charge on the new equipment. Discuss with management if significant fluctuation arise. So if there is any significant fluctuation, you need to have a discussion with the client. Last but not the least, you need to review the disclosures of the depreciation charge and the policies in the draft financial statement and make sure it is in line with the I-16 property plant equipment. Okay, one last part, that is about food poisoning. Before we move on to the food poisoning, let's see what the part D has to offer. List and explain the purposes of 4 items that should be included on every working paper. What are working papers? These are the properties of the auditor. And what do we expect on every working paper? Number 1, the name of the client and the year end of the client. The preparer of the working paper, the date on which those working papers were prepared, who reviewed it, the signature of the reviewer and the date of the reviewer, and last but not the least, a conclusion drawn from it. So the name of the client, the year and date, even the subject, preparer, date, reviewer, date of review, conclusion drawn. So these are the things. This is again knowledge based. Last part, describe the substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the food poisoning claim. Okay, let's read the question. Pineapple Beach Hotel Company's director received correspondence in March from a group of customers who attended a wedding at the hotel. So correspondence. So I would like to review the correspondence from the customers, those who have claimed, and I would like to understand whether a present obligation does exist. So that's my procedure number 1. They have alleged that they suffered severe food poisoning from food eaten at a hotel and are claiming substantial damages. The company's lawyer have received, lawyer, a third party. So I would like to send an inquiry letter to the lawyer and I would like to understand what does he believe, whether this claim will be successful, yes or no. Number 3, this whole situation will definitely be a point of discussion at the board meetings. So I would like to review the board minutes of the meetings in order to understand whether the director believe that they will be held accountable for that, or whether the claim will be successful, yes or no. Moreover, I would like to inspect the post year end bank statement and cash day book in order to verify whether any actual payment have been made. I would like to have a discussion with the management and would like to ensure what they believe and what assumptions they have used, and are those assumptions reasonable. Yes, you can get the written representation in that case, because I believe the evidence is only in the mind of the management. So I would like to obtain a written representation from management, what's their point of view and whether they believe that this is unlikely to be successful. So I will ask them to write it down for me. Last but not the least, I would like to review the disclosure notes in order to make sure that the client has fully disclosed the whole situation in accordance with IS 37 provisions, contingent liabilities, and contingent assets. Is this clear to you? The food poisoning thing. Please let me know in through your question box. Is this clear? Let me repeat it. It's not about if the amount is material, Priyanka. If a present obligation exists, and the reliable estimate can be made, and the outflow of the cash is probable, then a provision is required. If the obligation does exist but the amount is not reliable, a reliable estimate cannot be made, or the outflow of the payment is possible, not probable, then a contingent liability needs to be disclosed. But considering a claim, I think a provision needs to be recognized here. So let me repeat it once for you. What did I do? First of all, I reviewed the correspondence. Then I contacted the lawyer. Then I had a discussion with the management and figured out the assumptions are reasonable. Moreover, I got the written representation from the management as well. Last but not the least, I would like to review the disclosure notes. Let's see what the solution has to offer. Review the correspondence from the customers claiming food poisoning in order to assess whether a present obligation exists. Send an inquiry letter to the lawyer in order to get his point of view on board. Review the board minutes in order to verify how panic or how confident they are. Review the post year end period payments, bank statement and cash day book in order to verify whether the claim was actually converted into actual payments. Have a discussion with the management, get the written representation from management. Last but not the least, review the disclosure notes in accordance with IS 37. Is this clear now? Is this clear now? Okay, Arsalan, fantastic. Okay, before we move on to another question, let's try to hit another question. But before because we have got time, let's explore a little topic which might be examined in the upcoming attempt, and it's called computer assisted audit techniques, also known as CATs. So computer assisted audit techniques or automated tools and techniques. So there are couple of techniques or three techniques which are used using computers. The first technique is called test data. Now, what is test data? Test data involves the auditor submitting dummy data into the client system. Now, what you are going to do, you are going to enter a dummy data, a test data, a fake data into the client system, and the client system will process it. Now, if the client system is operating effectively and correctly as promised, it will prevent or detect the misstatements. So if the data has got few errors, the client system will detect it. The client system will correct it. If they, and definitely as an auditor, you will enter correct data as well. So the client system will correctly process it. So what does test data means? As an auditor, we are going to enter correct data and incorrect data. We would like to ensure whether the client system is operating effectively, yes or no. When we are running this data, this test data, there are two options. The data may be processed during a normal operational cycle. This is called live test data, or it could be processed during a special run at a point of time outside the normal operational cycle, and that is called dead test data. So there are two types of data: live test data or dead test data. Live test data has got a disadvantage and an advantage. It will ensure the client system is operating effectively, but this could infringe the clients or corrupt the client's master files. Whereas the dead test data involves testing of data when the system is not live, so the system has not got that much of strains on it, that much of pressure on it, so you will be able to verify, but you are never so sure about it. The second type of computer assisted audit technique is called audit software. What does audit software means? Audit software is used to interrogate a client system. You can use an off the shelf ready-made software, or you can use a customized software. What does audit software do? Audit software can select samples for you, a random sample, a sample over a certain amount, a sample over a certain date, a sample over a certain age. The softwares can calculate ratios for the auditor. The softwares can cast the ledgers. The softwares can recalculate the amount. The softwares can reproduce reports. They can stratify the data into different categories. They can identify the instance of any changes in the standing data. The softwares can they can produce letters for you in order to send it to the customers or suppliers. So softwares can perform many tasks. These are audit softwares. Last thing is called data analytics tools. What is data analytics? Data analytics is the science and art of discovering and analyzing patterns, deviations, and inconsistencies, and extracting other useful information in the data of underlying or related subject matter of an audit through analysis, modeling, visualization. So basically, what does data analytics do? Data analytics use big data. Big data is a large or complex data. And what does data analytics do? They try to figure out unusual relations, unusual fluctuations, any inconsistencies. So if the complaints are increasing, how come the sales revenue is increasing? If the advertising cost is decreasing, how is it possible that the distribution cost is increasing? Because if the advertising cost is decreasing, most likely the sales revenue would be decreasing and the distribution cost should decrease. So these are called data analytics, and these are the modern tools used by the auditors. Okay, the last question for the day. The last question for the day is called Airsoft Company. Describe the substantive procedure the auditor should perform to obtain sufficient appropriate audit evidence in relation to the completeness of the Airsoft Company's trade payables and accruals. So you have to apply procedures on the completeness of the trade payables and accruals. Part B, excluding procedures included in part A. So what those procedures which you have applied in part A, you have to exclude them. Describe the audit software procedures which could be carried out during the audit of Airsoft Company's trade payables and accruals. What procedures you are going to apply with the help of audit software? Okay, let's read the question now. Airsoft Company is a listed company which manufactures stationery products. The company's profit before tax for the year ended 31st December 2016 is 16.3 million, and total assets as at date are 66.8 million. You are an audit supervisor of B company and you are currently finalizing the audit programs of your existing client Airsoft Company. You attended a meeting with your audit manager where the following matters were discussed. Okay, the first matter. Airsoft Company purchases its raw material from a large number of suppliers. The company's policy is to close the purchase ledger just after the year end and the financial controller is responsible for identifying goods which were received pre-year end but for which no invoice has yet been received. An accrual is calculated for goods received but not yet invoiced and is included within the trade payables and accruals. The audit strategy has identified a risk over the completeness of trade payables and accruals. The audit team will utilize computer assisted audit techniques in the form of audit software while auditing trade payables and accruals. Now we have to apply procedures in order to verify the completeness. Now, for the sake of completeness, let's think about AEIOU. A. Let's compare the trade payables and list of accruals against the prior years. And if there is any significant fluctuation, we need to have a discussion and investigation over that. We are applying procedures in order to verify the completeness. So let's select a sample of post year end payments from the cash daybook. So they are recorded in the cash daybook. Let's make sure, follow them, and let's make sure, reconcile them, that they have been correctly recognized as a payable or as a accrual in the company's year end balances. Completeness. In order to verify completeness, what can I do? I can obtain the supplier statements and reconcile them with the client's year end ledger balances and the year end payables. Make sure everything on the supplier statement have been recorded. And then what? You need to apply audit procedures using the audit software. So what can software do regarding this trade payables and accruals? Softwares can calculate the payable days and compare it with the prior period, and if there is any significant fluctuation, you need to have a discussion with the management. Softwares can cast the year end payable balance and make sure that it is accurate. Well, for the sake of completeness, you can also cast it in the party. Software can generate letters for selective samples, for selective payables, which with material balances, and the circularization letters can be posted. Okay, compare the total trade payables and list of accruals against prior year and investigate any significant differences. Select a sample of post year end payments from cash book and make sure they are recorded in the correct period. Make sure they are recorded in the accruals or the purchase or the payables. Obtain supplier statement and reconcile them. Make sure there are no unreconciled items. How to apply audit software? The audit team can use audit software to calculate payable days for the year to date to compare it against the prior year. And if there is any significant difference, you need to have a discussion. Audit software can use to cast the payable balance and accrual listing, make sure to completeness and accuracy. Audit software can be used to select a representative sample of items for further testing. For example, sample can be selected with the help of software. Let's quickly go to the part B. The part B is the part C describes substantive procedure the auditor should perform to obtain sufficient appropriate audit evidence in relation to the year-end bank balance. We are already done with the bank balance. What procedures we need to perform regarding the bank balance? We need to obtain bank confirmation letter. We need to recalculate the bank reconciliation performed by the client. We need to make sure that all unpresented checks have been we have to make sure if there is unusual delay in any unpresented checks, we need to write it off. If there is outstanding lodgements, we need to verify that as well. We need to verify the bank balance according to the bank statement with the bank confirmation letter with the state trial balance and financial statements. Obtain a bank confirmation letter from the client for all of its bank account. Obtain a bank confirmation letter from the client's banker for all of its bank account. Agree all accounts listed on the bank confirmation letter with the trial balance and the statement of financial position. For all bank accounts, obtain the bank reconciliation and cast to in order to verify the arithmetical accuracy. So we are already done with bank balances. Let's not do that. Let's go to the next part. Directors remuneration. This is tricky. This is important. Heirs of company's board is comprised of 8 directors. Their overall remuneration consists of 2 elements. Number one, annual salary paid monthly and a significant annual discretionary bonus. So the directors get 2 kinds of payments. Number one, salary, which can be verified through the payroll account, their agreement from HR, and their discretionary bonus that can be verified through board minutes of the meetings. Their overall remuneration consists of 2 elements. Number one, annual salary and a significant annual discretionary bonus. All remuneration paid to director is included within the wages and salaries. So I would like to get the breakdown of this wages and salaries and cost to ensure mathematical accuracy. Local legislation requires disclosure of overall totals of directors remuneration broken down by element and by director. So at the end of the procedures, I would like to review the disclosures made regarding the directors remuneration, and I would like to make sure that it is in line with the local laws. So read the last procedure first. Review the disclosure made regarding the director's remuneration and make sure that they are in line with the local laws and regulations. Number second, obtain the schedule of the director's remuneration split by salary and bonus and cast to ensure arithmetical accuracy. So I hope you are clear with the first and the last procedure. Moreover, as far as the bonus is concerned, review the board minutes to identify whether any additional payments relating to this year have been agreed. Agree the amounts paid per director to the board minutes to ensure the sums are included are genuine. The same amount has been agreed in the board minutes. Moreover, you can agree a sample of individual monthly salary payments and bonus payment in December to the payroll records. The amount as per the monthly salary, the amount as per the bonus should be the amount as per the payroll record. Last but not the least, you can get the written representation from management regarding the director's remuneration, because the normal salary is not something for which you would seek written representation, but this discretionary bonus, this director's remuneration, this bonus element, you can get the written representation for this one. Okay, the last part of this question is something which we will cover tomorrow. It has got to do with the audit report. Identify what a key audit matter is. So audit report. Guys, as far as tomorrow's agenda is concerned, first of all, we will be solving questions on substantive procedures. Secondly, we'll go through a topic called going concern. Third, we'll go through a topic called subsequent events. And last but not the least, we'll go through a topic called audit reporting. So tomorrow's class is a very jam-packed class. The agendas are: number one, substantive procedure questions; number second, going concern; number third, subsequent events; number fourth, audit report, and that particular 5-mark question which comes in every attempt. As of now, if you have got any question, please raise your question. Okay, sir, can you describe what written representation? See, written representation is a weak form of audit evidence obtained by the auditor. Usually the auditor is going to request the management that whatever you guys feel like, whatever your assumptions are, whatever your point of view is, please give us in writing, and that is called written representation. If there are other sources of evidence available, far more reliable sources of evidence are available, you don't need to get written representation. Written representations are only utilized when there are no other reliable audit evidence available. Is this clear, Abdullah? Can we answer for claims just on assumptions? Yes, we are going to assume that the claim is a material one, and then we will verify the assumptions as well. We will have a discussion on the assumptions as well. Yes, Arsalan, this is for accuracy. That was for accuracy as well. Sir, what will be the benefit to attempt procedures first in the exam question? Oh, good question. I truly believe that we need a good start in order to finish strong. And in order to have a good start, first of all, on the exam day, we should start with the MTQs. MTQs are very delicate, so they require a very fresh peace of mind. So you should start with the MTQs. And once you are done with the MTQs, you should straight away go to the substantive procedure question, the last one. Why? This is a question which requires less amount of time with respect to reading the question, less amount of time with respect to answering the question. So you can catch up, you can make sure that your time management is not a problem. So if you are going to attempt substantive procedures at the very end, there is a huge possibility that you are going to fumble and you are going to write incorrect procedures, because at the end of the paper the time pressure creeps up. So you should attempt this particular question first, I believe so. I am finding it hard to go over audit planning. How do I become better at this? You must make sure that you are comfortable with 4 questions on audit risk. Once you are comfortable with audit risk, automatically audit planning becomes easy. And the 4 questions which I have recommended are uh, hurling, Darjeeling, centipede, and puny. 2 from this webinar day 1, 2 from last webinar day 1. Can you please explain the difference in integrated test facilities and embedded audit software? When it comes to embedded audit software, you are going to apply your software is going to be run on the client system, so there your software is not a separate one, you are running your software onto it. But the but there is another technique which is called walk-through test. Walk-through test means that you are not going to apply the software on the client system, but you are going to get the data from the client system, and then you will see you are going to run that particular data on your software, and you are going to evaluate whether the client software or the client's results are accurate or not. 5 marks, 5 sentences enough. Yes, that is why I recommend this particular question to be attempted first, because this will save your time. Okay, Suresh has asked, what is the difference between subsequent period events after? I will clear this topic, Suresh, tomorrow, the subsequent event tomorrow. Sir, can you briefly explain the different types of letterheads? No, you don't have to grasp letterheads. Ignore letterheads. Okay, repeat the program for tomorrow. I will start from substantive procedures. Then I will hit subsequent events and going concern. Then I will end up with the audit report, and there is for sure 5 marks of audit report in your exam coming up. 5 marks. I will tell you how to get 5 out of 5. If you have texted me, I will add you in the group, don't worry. Okay, how much time you should give in the exam to the MTQs? We'll have a discussion over that on the last day. Sir, in the exam report, substantive procedures are answered rather direct for any question. Is it the way to go? I didn't get your question, sir. In the exam reports, substantive procedures are answered rather direct for any. I didn't get it, Ali. Please explain your question. Okay, wait. These are the 4 questions. Puny company from the day 1 of this webinar. Centipede company from the day 1 of this webinar. Hurling company from the day 1 of the last webinar. Darjeeling company from the day 1 of the last webinar. So 2 questions have got financial statements in it. 2 questions have got no financial statement extract. So 2 have got ratios, but 2 have got no ratios. So these 4 questions will ensure ultimate success when it comes to audit risk. Is this clear? Danish Beg, yes, I will recommend a mock exam to my students, but not today. Once I'm done with the webinar, or probably on the 5th day, I will recommend the mock exam. I will recommend a mock exam to all of you, but you are not supposed to attempt the mock exam after the webinar. You have to invest 15-20 days on your preparation. Then you are going to attempt the mock exam. On the 5th day, I will share a plan with you all for the next 20 days. And after those 20 days, then you will attempt the mock exam, which I will suggest. Any other question? Before we come to day 5, do you recommend we attempt it first? Before you come to day 5, I would like you to attempt all those questions which we did from day 1 to day 4. That's it. Jay, I will reconsider your question tomorrow and then I'll answer it whether I would recommend the full paper, yes or no. I'll see. Please remind me tomorrow. I'll appreciate it if you'll remind me tomorrow. Wait, hold on. There is a question from someone, sir, can we apply substantive procedure when answering a question to perform test of control? Not at all, not at all, not at all. This is the biggest mistake. Test of controls are different when it comes, and substantive procedures are different. Test of control means you are trying to verify the controls. You are not bothered about the financial statements. On the contrary, when you are applying substantive procedures, your focus is on financial statements. These are two different things. Priyanka, I would love to, but the problem is I won't be able to entertain 100% population, and that is why my recommendation has got two parts of it. A, go to your tutor and ask him or her to mark your mocks. If you have got no tutor and no one to help you out, then obviously main hu na. Any other question? If there is no question, let me conclude today's webinar. Guys, my dear students, it's a humble request from my side. Please invest quality time today on substantive procedures. Ignore audit risk and kick internal controls. Let's ignore internal controls and let's ignore audit risk. We are not bothered about that. You need to invest quality time on substantive procedures today. Please, I will share the file or that particular Word file in the group right away. Focus on the substantive procedures today. Focus on the substantive procedures. Try to figure out the sources of evidence. If I say, what evidence should I expect for the warranty provision? You should think, yeah, if there is a warranty provision, there has to be an agreement between the client. So you would like to review the agreement between the customer and the client in order to verify what kind of warranty they provide. You would like to have a discussion with the lawyer. Maybe you would like to get their point of view. You would like to review the board directors of the minutes of the meeting, what they believe are the claim, whether they are going to be paid, stuff like that. You need to think. You need to invest quality time. Don't put yourself under pressure. Don't try any new question today. Don't try any new question. If you want to try a question, consult the solution and solve Pineapple Beach Hotel. Consult the solution, and with the consultation of solution, try to solve Elunda, and with the help of solution, try Airsoft. Don't try any new question. Okay, Barbara, the suggestion is practice will make you perfect. Trust me on that. We are done with 3 questions on substantive procedures. Your duty is to repeat these 3 questions 3 times, and then we'll see. And then we'll not say that you are done. We'll solve another 3 questions tomorrow, and then we'll see. You will groom and you will flourish slowly but surely. Sir, can you tell the questions you attempted today again? We attempted 3 questions today. Number 1, Pineapple Beach Hotel. See, on day 1, we attempted this risk question puny, this risk question centipede, and ethics orange financials. On day 2, we did internal controls Comet Publishing, internal controls Caterpillar, and Saxophone Enterprise was about corporate governance. Today, it was day 3. We invested huge amount of time on the foundation of substantive procedures. I was not focusing on questions today, but still we managed one question on substantive procedure called Elunda, another question on substantive procedure called Pineapple Beach, and another question on substantive procedure called Airsoft Company. You are not supposed to try this question or Andromeda today. You are supposed to repeat these 3 questions again and again, and then we'll see tomorrow what happens. Tomorrow's agenda will be number 1, Andromeda, number 2, Hyacinth, and then subsequent events, then going concern, and then audit report. So tomorrow's class will be an extremely jam-packed class. And I told you earlier, the characteristics of failure student is they tend to ignore minor areas. Tomorrow will be a day with a minor area, subsequent event, going concern, audit report. So don't miss out. Thank you very much, guys. If there is any other question, I would still like to answer it. Thank you, Abdul Ahad. Thank you very much. Means a lot. Okay. Sir, from where we should prepare for knowledge-based questions from now onwards? Okay, as far as knowledge-based concern is concerned, let me try to share some file in the group today. But remember, knowledge base is only prepared when you develop your own file, when you develop your own file rather than a ready-made file. I'm telling you, if you want to make sure you are damn good at knowledge base, try to develop your own file, word file. Try to develop your own pocket notes, develop and create your pocket notes. I can provide a list of knowledge base. I can even provide the chunks of knowledge base. What you are going to do, you are going to read it, you are going to close it, that's it. But you have to develop your own notes. Okay guys, thank you very much, most welcome, see you tomorrow. And please, I haven't said it and I haven't emphasized it that much on any other day, but today I'm saying it because this is extremely important. Try to invest at least 3-4 hours before my next class on substantive procedure. This is a make or break situation. This is a do or die situation. You can make it, you can do it. I will share the word file which was extremely helpful, I believe. That one, these sources of evidences, those AEIOU, everything. Thank you very much. See you tomorrow.